Welcome everybody. My name is Mike Hamilton and I am just going to go through an update of the big picture in the markets. So I'm from Trade the Easy Way and we run a day trading room and this annual weekly checkup. All right, so what I am going to do is just run through the market proxies first. Let's look at the dollar. I'm going to go through your euro suggestion, your euro idea. Dollar's not come up. Right, dollar is, so here we are with 3 hours of the Monday US market to go. And this dollar is dropping out of the picture at the moment. So next stop 102. But this, at the moment, we're coming out of this structure. So we looked good into the new year. And then on the back of non-farm payroll, on monthly jobs, we have dropped out of here so far. So I'm going to take that off now because that is now irrelevant. What is relevant is whether we can come down to 102 and punch through this. This is the dollar basket, which is predominantly, I think the euro constitutes about at least 40% of this dollar basket, if not more. So we're tracing our steps right back to June last year and possibly further. The ambush zone's right down there at 99.35. What do I think is going to happen? I tell you what, if we come into this 102 and hold and on volume, because at the moment the volume is increasing on this drop, so that suggests that the dollar is very weak here. If we continue to close lower and continue to see this volume increase, then we have much more to go. So let's just switch to the euro US dollar now. It is strong. This is the weekly on the right, by the way. Let's start with the weekly. This is a major area of resistance. So we were here on left hand in April, May 2020. So you can see if I'm going to update this actually. Yeah, let me update this. I'm going to put this on this last swing from that 123 to that recent low. Hi Andy, hi Patrick. So it looks as if we can come in and see this 111, this 109.50 area. I'm just thinking that we've got UK GDP on Friday and we've got US CPI, US inflation on Thursday. It's a short week because the US are off next Monday on Martin Luther King Day. A lot of people have been talking about how inflation has long since peaked and could potentially drop off quite fast. I think inflation is going to be more persistent than that. A lot of it's going to be down to the oil, I think. So we'll look at oil in a moment. But if this continues higher, then that bodes well for the US market and could potentially dent the European markets if the dollar comes off the boil. So you got trend line of 50% up there at 109, 101. Daily is very strong. That's not set properly either at the moment. See, I don't often bother with the euro, so it's worth looking at. Let's have a look at last year's range. Right, so last year we came into the market strong as well. This time last year, started dropping off. We had a drop off mid-Jan, and then the big drop started on that double top. We are already at a major resistance point from June. So we could, again, if we pop through here, we could come and see 110. But on the annual level, I think we could, my view is we could give way here, or if we pop to the next level, give way on that March, April resistance. So far we look as if there's certainly no reason to sell it. We're coming up on volume. We've held 50% as we come into this new month, this new year. So any pullbacks at the moment to 106, 105, 106 are buyable. It's just a question of whether we keep closing higher on volume. The volume is increasing. So as long as we keep coming up on volume, then we can keep going higher. So the main trend line, the short-term trend line resistance is up there at 110. So at the moment, it all points to 110, unless we get a major close lower off of this resistance level. So all I can suggest at the moment is that pullbacks, you keep buying pullbacks. If, however, we come underneath this trend line, then hold on to your hats, because I think we could end up down there at 90. Interest rates, we've got Fed meeting on the 1st of Feb. We've got the earnings season kicking off in earnest Tuesday of next week, which is the date next Tuesday next week is the 17th. So if we are going to have problems with the earnings season, and we are potentially going to dent these markets with weaker earnings, then we're at the point, we're going to get to that point back end of this week and early next week, with US inflation and the earnings season getting underway. So like I said, at the moment, there is no reason to sell the euro. It looks as if we are going to come and see the 109, potentially 101. Pullbacks are viable. Right, let's look at the DAX. DAX had an incredible run. So on the daily chart, we've got a huge amount of resistance up there at 15,250. If this volume peters out and we get a drop underneath this 14.5, then hold on to your hats, because this is going to come lower quite quickly. So we are already hitting trend line resistance. We're already hitting a 2022 trend line on the underside of it. If this fails, like I said, hold on to your hats, particularly if we get under 14K. This is a major, major resistance level. And at the moment, the volume is, okay, it's only Monday, but at the moment, there is some sign that the volume is pulling off. We had a similar setup beginning of last year. So again, I mean, the market's just dropped off pretty early on, and any pullbacks were sold into, even around here into early Feb, mid-Feb, and then we just dropped out of the sky into early March. And the rest of the year, any pullbacks were sold into. So that's why I think so we're at a pivotal point here. What's my preference? My preference would be I think we might get further. I think we might, this is a very handsome move up here. of October. So my preference would be to wait and see if we can get up to 15,300, and then potentially sell if we get if we come into that resistance area and start to see some lower signals. However, I will short in a much sooner level if we close under 14 and a half pretty quick. There is no reason to sell this at this point. Let's make that quite clear. There is no reason to sell this market at this point at all. So that short suggestion is a scenario at this stage, not a recommendation. It's a scenario. If we look at the weekly on this DAX, we have a situation where we've had a really nice pull off of this selling. We just need to make sure, we just need to see if we can stay in this area and punch through this resistance. On the evidence at the moment, I think we can. But any lower closes around here, and we're coming right into the bear zone of last year already. So no reason to sell, but just watch out for any sell signals, of which there are none at the moment. Let's look at, let's do the same for the FTSE. Yeah, the FTSE is more interesting. Why? Because if we, yeah, this is where we're just broken above the 2022 highs. If we close underneath 7,700, I'm going to short the heck out of this thing. If, however, we hold here and at the back end of the week close above, or hold 7,700 and start closing above this this new high, this new 23 high, then get long and stay long, and look for 8,000. So there is no reason to sell this. We could come all the way back to 76.30. But if we then pop back above 7,700, then we can go to that extension. But this is a real decision point. All the time we hold above 22 highs, buy dips. If we ever close underneath this 22 high, I will be shorting the heck out of it with a stop above there. So dips at the moment are buyable. We've got major support there at 76.24. So like I said, we could come back to November highs at 76.20, 76.40. As long as we pop back above 7,700, at least a couple of days later. If we come down here and close underneath that level, then, like I said, get short, stay short. Let's have a look at the Dow. You're short the FTSE from 76.47. 76.47. Well, that close on Friday, in my book, has blasted through any potential sell signal. I mean, on the Thursday, that was a really bullish close on Thursday. To close above November highs was really bullish. And then we had yet another bullish close on the Friday. So if this is a corrective wave, let me get the pen. If all this is a corrective wave after all the selling, and we stay underneath 7,700, then yeah, I'm with you on the short. We've got to close underneath that 7,700. I would then short 7,700 and then see if we can start to wind down. But in my book, there's no sell signal at the moment. Even this lower close today does not represent a sell signal. Only a full-blown close underneath 7,700 on volume would I start to short. Okay, so we are. It's a key decision point. At the moment, it's bullish. Gold's hit a major resistance level. It's coming up on sweet volume. So I would suggest any pullbacks. We've got US inflation this week. Any close under 18.5, then this could potentially pull right back. We've broken out of this funnel pattern on volume. So pullbacks into 1850 are still viable, but a close under 1850 could jeopardize this whole move. Again, very sweet move off the autumn period, particularly with early winter, November, at that 1615. Huge pattern on the upside. The stop at 7750, right? So we got 1, 2, 3, 4, 5. 1, 2, 3 wave correction. So this actually kicked off from 1790 towards the end of the year. So if that's a wave 1, wave 2 would put it back into this structure, and a wave 3 could take us through 1900. So we could pull all the way back to into December's support, around about 18, 20, 25, 30. And as long as we hold and close higher, this wave may still be underway, so you may only get shallow pullbacks. My preference would be to buy a shallow pullback, see if they work, stop underneath these levels here, and then see if we can close above this resistance and go into 1900 and beyond. But big numbers like 1900 are going to be potentially problematic unless we get a really big blast through it. But like I said, volumes are good, no reason to sell. Inflation is on Thursday for the US. Friday is the start of a 3-day weekend for the US. So at the moment, it's looking good, and the gold could still blast up. And who knows, we might even punch through 1900 soon, and then come up to 1970 and beyond. It's looking good. Oil. I did take a slice out of oil. Don't know if I've got my. Yeah, where's my? I'll go and find the. Hang on, go find the screenshot. Yeah, I did take a slice out of oil from the pullback area here. I think this is a 4-hour chart, I think. So I took it off at this 76.70 and then left it. So we hit the 20-day average, and any market that can't close above the 20-day average is potentially bearish. And that is the 20-day average. You look at the 50. So unless we close above this trend line, unless we close up significantly above 76, hold 75 and close above 76, this could come under. The volumes are pathetic. So all the time it's under the 20-day average and the volumes are this pathetic. We could drop out of this picture. Decent support, but very bearish week last week. Very bearish start to the week. So it's got it all to do, basically. Right, moving on. A quick look at silver. Silver is underperforming gold at the moment. I think it's just had a good run, and it looks at the moment as if it just needs a pullback. That's a bit slack of me. I've not updated this one. Yeah, it's already been on. In fact, this was much more bullish on the breakout than gold was. Lovely head and shoulders pattern there, which completed in mid-October. So we are resting up here, unable to get through that resistance. So the trend line pullback at this stage of its journey would be yeah, I would suggest that might want to come and see 22 again at the moment. If we pop back to 23.5 and hold, then we could go back on this journey. But that's been on a sweet run. It is having a sticky start to the year, but yeah, I think that 22.25, it might pull back as far as that 22.25, at which point I would definitely be a buyer. Right. Stocks. Let's have a look. Yeah, I've got three. My common theme for this year is going to be just selecting a few good movers, and my suggestions for the moment, everything is holding up well. BT, Vodafone look good. In fact, BT could be one of my current recommendations. This BT has gone. We do really need a pullback to at least 118 on this, a 10p drop. I hesitated on this, and I shouldn't have done back in the last year. So any pullback into this January 4th bar is, to me, is viable. And Vodafone has had a good run as well. My preference, I think BT is a buy. The Rolls-Royce is picking up on decent volume. So any pullbacks into 95 are good for that one at this stage. So it's got a lot of resistance up there at 16, 110. So my recommendations are pullback in BT, Rolls, and where's my list gone? Hang on 1 second. Just mislaid my list. Got it. Yeah. So I like V. I'm really back into BT and Vodafone. I think these two had a really rough ride last year. Vodafone's coming up on volume. It's already hit resistance, so I would, if you're interested, I would try and buy 85. That's a buy signal last week. We've completely engulfed the 12th of December weekly bar. I think that could at least, I would expect that to see 130. I think we can go back up to 130 on this one. BT, I think we could do, if we can get a bid on this one, I can see this going through £2 again. I'm talking about, into the back end of the year. Oh, you're on a train, right? Well, Patrick is, right. What was the other one? I think IQE is having a good run. Very handsome volume. So I think any pullback to 48 is potential on that one. The miners are having a great run. This PAF is coming up on volume as well. And what else have I got? My main trade of the week, my other suggestion is going to be seeing a lot of volume coming to Glencore. Glencore had a great year last year. Let's tidy this chart up. I think Glencore can. I think Glencore could go up to £7 if you get an opportunity to buy into that support around about the 520 mark. £5, 520. I think that can break. Because as long as we hold that structure and don't close underneath £5, if we obviously need to close above and hold 570. But I think the volume in this one is significant. We're coming up on healthy volume. So that dip into the start of the year has been bought. So don't chase the market, buy the pullback, but we've got to close above 570 in the next couple of weeks. Otherwise, that could pull right back into £4. But the volume suggests that that could go up from here and that could build from here. Right. That's all I've got for you. I'm keeping these nice and short. Anything you want me to look at? I'm just flicking through my list. Elementis, talked about this a lot last year. That's come up from 87 to 127. TPI cap. So these are all pulling back. I think these are, I must update these, can't apply me. Man Group. Liking Man Group. That saw a high of 270. It's got problems here with that trend line. So I would back off and leave it a little bit longer. I wouldn't jump in at this stage, because if we start closing underneath £2, that's had it. If we dip into £2, 210 on hold, I think that is worth a buy. Okay, so now let's have a look at a couple of retailers. Let's have a look at look at shoe. Oh, this thing went beyond. That's a good short up there at 230. So that's coming down on volume. So if you're looking for a short, I would look into 220. JD Sports, right, okay. Boo, come to that in a second. It has seen the volume, trying to get going off these lows. Royal Mail Group, amazingly, that's picking up, but the volume is not great. That is a worryingly low volume. And Sainsbury's has popped right back to 250 resistance. EasyJet. Now, ASOS, is this a recovery? Definitely the volumes are improving, but it's right underneath the trend line. Right, JD Sports. Yeah, it's definitely picking up. It's got so that, like so much, it sold off very heavily in the early part of January last year. Wow, that's a major resistance point up there from July. So we kicked off the year on decent volume. I think that needs to fall back to about 130. Are you looking to short it? Are you in it and taking profits, or looking to short it? You're in it, right. Yeah, 158. Oh, 150 is an obvious place to get out. Yeah, decent. Well, decent buy signal on the 21st. Started to pick up in October. Decent run. Pull back into the 21st. Yeah, I don't know what price you got in, but yeah, that's been on a good move up there. I'd be tempted to get out at 140, but hey, I mean, don't take any notice of me. That could go to 150, but that could go and find 160. Brilliant. Okay, listen, I'm going to leave it there. I'm going to keep this nice and short. But the weekly on this JD Sports. Yeah, it's a crucial point. I tell you what, if it breaks up from here, I don't think it. I don't think it will. But yeah, huge amount of resistance. Brilliant. Thanks for joining me. I will catch up with you soon. I'm going to set up some face-to-face events soon in central London. If I were to set up a central London event, would you come along? Would you be interested in that? Just out of interest. Live in Wembley. Great. All right. Thanks a lot. Talk to you soon. Thanks. Bye.